This morning on the Ag Issues program, a pleasure as always to bring back to the program Roger McEowen, Professor of Agricultural Law and Taxation at the Washburn University School of Law, as he joins us on the Ag Issues program this morning. Roger, good morning. How are you?
Good morning, Greg. Just fine.
Well, let's get to it. Of course, we are now 6 days post-election. We do know that President-elect Trump will be soon sworn in for his second term in office after defeating Kamala Harris. But there are still several things to look at, specifically on the House of Representatives side, where I think the last I saw we've got like 18, 19 races still undecided. So we do know that the Republicans have control of the Senate, or will have to take control of the Senate. Unknown right now. More than likely, Republicans will have control of the House, but still up for grabs, too.
Yeah, it looks like on the House side, it'll stay about the same margin as it was before, maybe one or two pickups for the Republicans, but you're going to be in that 220. You need 218 for control. I think they're going to end up probably 220 to 222. So I think the House stays Republican. Of course, as you said, the Senate flipped. And a major victory for President Trump in getting not only the electoral college vote, but also the popular vote. That's very big for him.
Absolutely. Now, having said that, we have the lame duck session, I believe, getting underway this week, or at least the leadership will be decided. So all members will be back in the nation's capital, and there's still a lot on their plate here in the lame duck session.
Yeah, there is. The question has come up, of course, at my seminars as to whether we get a farm bill. Of course, the major questions that I face are what's going to happen with tax policy, and I'll talk about that in a second, and whether we can get a farm bill in the lame duck session. I think it's slim chance. It's not a zero chance, but I think it's slim. It depends on what the Senate leader on the House bill thinks she can get done or wants to get done on this before she retires. I think they probably just pass, and it goes to the new Congress to craft a farm bill. I would say one thing on that. You've heard a lot about the so-called Section 45Z, flipping from 40B in the tax code to 45Z, and this is the Sustainable Aviation Fuel Credit. We do know that Trump does not like that. So 45Z may be killed off. I could see that. And I don't view that as a bad thing. It is so badly been put together. That GREET model is awful, unworkable. They've got to do something different with respect to that. And as I've said at my seminars, I think the ethanol people will be a lot better off just trying to focus on the E15 and expanding the marketability of that rather than this 45Z stuff, because that's just not going to work the way it's structured right now. Maybe they can get it restructured, but I doubt it. I think it's kind of in bad shape the way it was put together. So that's a big issue that's out there. And with a change in administration, that's going to change that policy focus on that. Now, from a tax standpoint, the one thing that needed to happen for the current tax rules to continue was that Trump would win and the Republicans would get both bodies of the Congress. That has now apparently happened. We're still, again, waiting on the House side, but I think that looks like that's pretty sure that that's going to stay Republican. And that was the only mix that would continue the existing tax policy, which is going to be a good thing for farmers and ranchers, good thing for people in general, because everybody was facing major tax hikes if TCJA was not extended. And now we've got numbers that have come out that showed that the initial projections that it was going to be a revenue loser over 10 years were wrong. And now people that score those in the Congress, or not in the Congress, but for Congress, are projecting that TCJA will actually increase revenue over the 10 years of it. And a lot of that is coming, the vast majority of that's coming on the corporate side of things. The reduction in the corporate tax rate has significantly boosted corporate tax revenues. So from a tax policy standpoint, that's a good thing. And we'll see what the details of tax policy will be as we go forward.
Is this one as well, typically on tax issues, they don't normally get done quick and easy and or painless, that even though it expires at the end of 2025, what's the potential of we, about a year from now, still will be talking about that?
That's a good question. I think the possibility of that has decreased, given that Republicans will look like they control both bodies of Congress and the White House. So that should theoretically make things a lot easier to get tax policy through sooner. And of course, all of us want that. All the practitioners want that, because we want to be able to advise people in terms of tax planning what to do. And we can only do that to the extent that we know what the rules are going to be. So we're all hopeful that that gets done soon. Remember last year, the House did pass a tax bill that had some provisions in it, not a major tax bill, but would have cleaned some things up and extended some things early, and that didn't go anywhere in the Senate. So I think it'll be a lot easier, because now the Senate is flipped and it looks like the House stays the same. So it should make that type of legislation a lot easier to get through, at least theoretically. Now, it is Congress, and Congress has been historically good at doing nothing for a long period of time. So I just hope that's not the case again.
This is, we haven't seen, or we're starting to see a few appointees, or at least reported appointees, not official as of yet, but potentially we could have Robert Lighthizer back at USTR, still have Agriculture Secretary, but regulations-wise, and I know many eyes will be kept on who's going to take over at EPA as well.
Yeah, that's true. And keep in mind, the administrative state has changed substantially with the repeal of the Chevron doctrine by the U.S. Supreme Court this past summer. That's a big deal. And now you're going to I think you're going to see a massive change in the bureaucracy, and particularly such agencies as EPA and perhaps USDA, FSA. FSA has blocked a significant interpretation of a tax provision that a group of us have wanted for some time. I think now we can get those people out of the way. And it has to do with how you calculate farm income for purposes of farm program payment limitations. And with the change in TCJA and the change in the like-kind exchange rules that were also part of that, a lot of farmers will have income that doesn't go through a Schedule F because they'll sell or so-called trade machinery, and it goes through a Form 4797, which doesn't count as farm income for purposes of the farm programs. And there's a group of us that have just been pounding on FSA for a year and a half, 2 years, to please change that interpretation. And they put their foot down. I think the people that have been putting their foot down now will either change their position or they're going to be removed. So I'm hopeful that we can get that done either administratively or we'll get it done by statute with this Congress, given the makeup of this Congress. That legislation, I can tell you, that legislation's already been drafted to make sure that when a farmer sells machinery, we count that as farm income for purposes of the gross income test, the 75% test for payment limitation rules. And that's a big deal for a lot of farmers.
Roger McEowen, professor of agricultural law and taxation at the Washburn University School of Law, is our guest. Roger, did want to ask one more thing on the political side, or just is there any other thing we need to watch here through the lame duck in the early part of the session? I wanted to make sure I ask you that too.
Yeah, that's a good question. I think one other thing to look at would be on the Senate side, who's going to emerge as the leader on the Senate side. There are three that appears to be vying for that position, two of which would make it a lot easier to get Trump's vision through on the Senate side, one of which may not. And so that could also have an impact on farm and tax policy, too. So that's another thing that I'm looking at, since we know who's going to control the Senate. The fight is over the Senate side. And that leadership tussle is historically kept secret, and there's no involvement by the White House with respect to that. So that is one thing that I'm looking at, somewhat concerned about, because that will influence the pace of how things get through on the Senate side.
I get the impression there's no real clear-cut leader amongst those three either.
Yeah, that might be right. That's kind of the feel that I get, and from people that I know in Washington that I work with to get in drafting legislation and staffers. So I think that feel is right, but maybe we'll know. I think you and I could talk about this probably more in detail in a couple of weeks. I'm kind of holding off writing some things for my Substack until I know exactly what the leadership of the Senate looks like and what the vote margin is in the House. And that's going to be important. And it's going to be important to us also on an international front in dealing with wars and threats of wars and on multiple fronts. That's got to be dealt with, and that's got to be dealt with quickly. And that impacts trade, which also impacts ag, and so that Senate leadership position is pretty important.
All right, some issues we wanted to bring up because, as you say, these occasionally come up and need to be talked about. The first thing to discuss concerns water rights and conservation easements.
Yeah, this is a big issue, particularly out west, but you can see this in areas of Kansas too. And what I'm combining here are two different thoughts that sometimes run together, and that is when you donate a permanent conservation easement on your farmland or on your ranch land to a land trust or some other qualified charity, but particularly we think of a land trust, then it has to meet some very particular requirements, and it has to be permanent and so forth to get the tax deduction. And some of the tax deductions on these, Greg, are incredibly high. In fact, you'll get a kick out of this. The 11th Circuit Court of Appeals a couple of weeks ago called a balk on two former Atlanta Braves pitchers, John Smoltz and Tom Glavine, who had donated a permanent conservation easement on land that they had purchased in South Georgia. And they won part of the tax court issue, but they lost on another one, and they were appealing that. But what happened in that one, Greg, is that the court ordered what we call a Rule 155 computation. They said, all right, here's our decision. Now, IRS, you give us a computation of what you think the deficiency is, and taxpayers, Glavine and Smoltz, you give us the same computation too. Well, instead of doing that, they immediately appealed to the 11th Circuit, and the 11th Circuit said, well, this is interesting. I have two former Major League Baseball pitchers before me, and not only did they occasionally balk while they were pitching in games, but they have balked before my court because you can't appeal until that Rule 155 computation is done. So they said, I don't have jurisdiction to hear this case. But it was a fun read because the judge really had fun with those two pitchers, former pitchers, and calling a balk on them procedurally. But anyway, and they're talking about multi-millions of dollars of tax deductions on that land. What I'm talking about here is if you've got water rights associated with the land that is donated to that land trust, well, you got to know exactly what your water rights are. You're not going to be able to figure that out probably from your title insurance policies, from title opinions. They don't tell you anything usually about water rights associated with the land. So if you do have water rights and you donate that land to a charity, a land trust, for example, you're going to have to determine if the water rights are material to the easement's conservation purpose, because that's what has to be protected in perpetuity. And you're going to have to determine what's required to enforce those rights. And you're going to have to restrict the use of the water rights consistent with the easement's conservation purposes and make sure that the water rights are going to be maintained and used and not abandoned. And if they aren't enforced, you could lose your charitable deduction that you claim for donating the easement. So just a quick message here for people that if you're going to donate a permanent conservation easement on your land and there are water rights associated with it, you better talk this through with your tax professionals, with your legal professionals, to make sure you got your deed drafted correctly and you've got enforceable agreements in place to make sure those water rights are preserved to protect the perpetuity of that easement.
And if you're a major league pitcher, make sure you get the right lawyer too. So
make sure you follow the rules.
Yeah, exactly. All right. The second thing, and especially for those completing estate plans for so many farm and ranch families, is planning and handling long-term care costs.
Yeah, and that's a big issue for many farm and ranch families. And one way, of course, to address long-term care costs involves long-term care insurance. And so that makes it important to study the types of policies that are out there and consider all those terms and conditions, because they do vary. And policies will vary from 1 to 5 years, and you need to know what the length of your coverage is, what triggers payment under the policy, and what are the terms and conditions associated with those triggers, and make sure that you understand those. And you might have a policy that has a waiting period from anywhere from a few days to a year before anything gets paid out. Now, a lot of people have a 6-month delay on their policy. In other words, they end up in a nursing home and they private pay for 6 months, and you're looking at $8,000 to $10,000 a month on what that cost would be. And so they've set aside that money. They're going to private pay, and then the policy kicks in. And that the reason that is set up that way is you can get a significant drop in the annual premium on your policy if you delay the payments a little bit. And actuarially, most people don't last much longer than 6 months in a nursing home. Now, there are some that last decades, but many don't. And so the actuaries that are behind these policies know that, and so the premiums can come down significantly if you delay payments. So that's one thing to look at. Maybe you can tailor the policy to pay only a portion of the cost that your income doesn't. But what the idea here is to protect the family assets, protect that farm and ranch land, and you may not have to gift the assets to protect them. And those are just some things to keep in mind, and make sure that policy has an inflation adjustment provision. But long-term care planning is difficult for people.
And Roger, as we're running out of time, we're going to get one more in. And this is talking about tax codes. Allows for an employee or independent contractor to deduct temporary travel expenses while away from home. There's a problem, though. The problem is, where's your home? And if you travel on business but you're not away from home, your travel expenses aren't deductible. They're non-deductible personal expenses in that situation. But the key comes down in all of this, and sometimes farmers and ranchers get caught up in this because in the wintertime they've got a non-farm job, for example, and it's important to keep the rules straight on where your home is at. But the IRS says a home is defined by being in the vicinity of your work. So if you choose to live a distance away from your work for personal reasons, well, then the travel between your residence and the place of business is not business related. If you're hired for an indefinite assignment, your tax home probably switches to the new place of business soon after the date you're hired. If you don't have a regular place of business and you move from area to area for jobs, the IRS says you can't be away from home because you don't have a tax home from which to be away from. So therefore, you can't deduct your travel expenses. So I don't want farmers and ranchers to get tripped up on this. If you understand the home rules, you get a temporary job, maybe you can deduct your travel expenses. But you got to do it right and be aware of what the rules are. All right, Roger, we're out of time. But as always, if people want more information on any of these topics, plus a couple others we didn't have time to get to, and soon, when you start to write about what we're seeing leadership-wise in the House and Senate, what's the best way they can find that information?
Well, the technical things, plus my commentary on the political world, will be on my Substack, and that's McEowen Ag Law and Tax.substack.com. The other topics we talked about today will be on my blog, and that's washburnlaw.edu/WALTR, and also on the Ag Manager website over at K-State.
All right, sounds good. Roger, as always, appreciate it. We'll talk to you in a couple of weeks.
Thank you, Greg.
That is Roger McEowen, professor of agricultural law and taxation at the Washburn University School of Law, as he is our guest this morning on the Ag Issues program right here on 580 WIBW.